Bank stocks. They had a terrific run since the election. They all took a hit yesterday, a very modest bounce back as of this morning. The financials were the worst performers yesterday, back up just a little bit today. Now take a look at Apple, Alphabet, Facebook. All of them at or near or above their all-time record highs. Apple and Alphabet are at all-time record highs. Important point, Apple's at $140 a share. Facebook is almost there. This is turning out to be a big day. We're at 20,987 on the Dow as we speak. Ashley Webster is here. So, of course, is Liz McDonald. Brian Bremberg, John Layfield, Scott Martin complete our team for coverage this could be historic morning. All right, is this, because we're up, is this the second leg of the rally? I'll start with you, Scott Martin.
Stuart, I think it is. Now, here's what's funny about this second leg of the rally, as you put it. This is actually going to be Fed-induced with higher interest rates, sports fans. That's the most interesting comment I think that we can make here today, is that the market can now handle these higher interest rates because the Fed is back in the picture saying economy is turning around, we're getting momentum, inflation is soon to follow, higher wages are coming via strong jobs market. This is what the market has been waiting for.
John Layfield, is this the second leg of the rally?
I agree with Scott. Remember, last time interest rates were really raised was in 2004. The first 2 months, the market was down. Then it was up 35% over the next 2 years. So just because you have a rising interest rate environment doesn't necessarily mean the market's going to go down. I think Scott's right about the economy turning around. This is a valid sign of that. What is the biggest thing on the table right now is the corporate tax reform that we were promised by Labor Day. If we get that, the market definitely goes up.
Okay, now, ever since November the 8th, most of the people who've appeared on this program have said, yes, this is a solid rally. It's going to keep on going up. The market wants to go up. Liz, are you in agreement with that, or are you going to throw some cold water around?
I think it could turn around. And, you know, look
Wait
at
a minute.
this.
What did you say?
I think it could turn around if the Trump administration gets distracted by the wiretapping stuff and doesn't get his reform agenda through.
Yep.
Watch this striking statistic. Both the Dow and the S&P have gone without a 1% decline. No 1% decline in over about 106 days. That's the longest since 1995.
That is astonishing.
So that's astonishing that we're in this kind of a market range right now.
And you have to believe that after all that time, sooner or later, probably sooner, you get the 1% decline. I mean, statistically, that's what you've got to look at. But you, Brian Bremberg, you think this is a Fed-induced rally and that it is the second leg. Is that correct?
It's Fed-induced right now. I'm a little more cautious about the second leg. We're forgetting about all the uncertainty on the big policy issues here. What about health care reform? I mean, how much is that potential for delay there? It's still got to get to the House Budget Committee and then the Senate, and both want different things, Stuart.
Yes,
this is threading a needle that's almost impossible.
But we've been saying
we're not even talking about tax reform
We've been saying that since January the 20th.
Yeah.
And we've been saying political turmoil in the extreme, and the market keeps on going
That's right.
up.
It's stalled out at times, and this has looked bad. It moved up again with the Fed, but give it some time here. We've got a lot of uncertainty still in this market.
Even North Korea firing off rockets didn't stop this.
That's very true, actually, when you think about it. What do you got to say, Ash Webster?
It's all about the Dutch elections, Stu, let's be honest.
Nice try, son.
Thank you.
President Trump, he wants to get rid of the aggressive gas mileage targets from the Obama era. It looks to me like that sets up a big fight with the Greenies. That would be the Greens, the environmentalists, okay? I mean, I could see a fight coming a mile off.
And it sets up a big fight for the green car movement, the electric cars. You're talking Tesla, the Chevy Bolt, the Toyota Prius. Those electric vehicle sales up 60% about year over year last year. Those sales.
Yes.
So that, and even Ford is moving to make lighter F-150 trucks with military-grade alloys. I mean, wow, what a turnaround if the president gets this through.
Well, it's clearly good for the automaker stocks. I mean, the president was in Detroit. He goes to talk to the automakers. He says, no more of this gas mileage stuff. Well, let's get rid of that. And the automaker stocks went up yesterday. They're going up again today, largely. It's a plus for Detroit, isn't it?
And this is the kind of thing that actually could bring production back to the U.S. I mean, automakers are moving across the border because it's,
Wait a minute. You are a professor of business. You can see car manufacturing jobs coming back to America big time, or just a little dribs and drabs here and there?
I could see production coming back because they're moving small car production across the border because these fuel economy standards hurt margins, and they've got to make that up some way.
John Layfield, do you like this kind of industrial stock? Automakers are industrial companies. You like them?
I own GM and I own Ford also, so yes, I do, and I put my money there. They both have 5% yields. I think we're going to advance manufacturing with cars. They're becoming computers on wheels, and that type of manufacturing, that brings your high-paying jobs. You talk about Elon Musk, the Gigafactory, the jobs start at $25 an hour. That manufacturing can come back to the United States.
That is fascinating. A 5% yield. So if I put my money into General Motors or Ford at this moment, they pay me 5%, a dividend of 5% per year, and that's dead safe. That's interesting.
Nice.
Any takers on that one? I mean,
mighty tempting, isn't it?
If you think that a 1% drop is coming or a correction is coming,
that's exactly
what's wrong with a General Motors or a Ford that gives you 5%?
That's right.
And they'll pay you that regardless of what happens to the stock.
Yeah.
Good.
Okay. Let's see now. What Tesla? Can you show me Tesla? Because I think it's up this morning. Yeah, it is. Look at that. $3.59, $2.59 on Tesla, even though the gas mileage standards are gone and gasoline prices are coming down. Brenberg, can you explain that?
Tesla's a longer-term play than this. I don't think this is bad for Tesla. It might be bad for the marginal electric car company, but this is not bad for Tesla. It's more of a good news story for traditional Detroit than it is bad news for Tesla.
All right, now look, we're 6.5 minutes into the session, and we did not yet hit 21,000. We got very, very close. We got to 20,990 and change. Now we're up 30 points. 20,980. Individual stocks in the news. Williams-Sonoma, know it well. Higher profits, raises the dividend. It's up 2%, yeah, roughly. 49 on Williams-Sonoma. Weaker profit, weaker revenue at the clothing retailer. Guess. Ooh, taking it on the chin. 13% down. I wonder if that's part of the retail ice age story. Maybe. Next case, more money coming in at Oracle. They're doing well with their cloud business. Just like Amazon, just like Microsoft, Oracle up a phenomenal. That's a huge company, and they're up 8%. You don't see a gain like that very often, do you?
No.
Scott Martin, you like Oracle with an 8% gain?
Yeah, we love tech, Stuart. We own a lot of our NASDAQ indexes in our portfolios, of which Oracle is a part, because as you mentioned, I mean, web services, a lot of the cloud-based computing that's going on now benefits companies like Oracle. So having Amazon having the news that they have with their Amazon Web Services and now the Oracle news is a great reason to own NASDAQ, i.e. tech stocks.
Got it. Now, how about GoPro? They are cutting jobs. They've produced something of an upbeat outlook. And look at the stock. An 11% gain. John Layfield, I'm going to ask you about GoPro. You've often called it a one-trick pony. Well, they're cutting staff. They've got an upbeat outlook. The stock's up 11%. Would you rethink your opposition to GoPro?
I would rethink at these prices. This was the biggest stock mistake I made in the last couple of years was buying GoPro. I think they are a one-trick pony, and the reason is because if you buy the Apple iPhone, you want to buy the next generation. You don't necessarily want to buy the next camera that comes out from GoPro, but they have a fantastic niche market. They have the best camera in that market. I'm worried about the iPhone competing with it, actually, but I would look at it at these prices.
Did you lose your shirt on GoPro, John?
I lost my shirt, my tie, and my cufflinks, I think. It was a terrible, it's the worst stock I've made in 5 years.
I've been there. People Express, lost my shirt. What was it? Boston Market, lost my shirt. Such a life. All right, here it is, the Amazon story of the day. They are now delivering wine and beer in Ohio. They're the everything company.
Yeah, it's just in time for March Madness.
Yes.
So if you want it in an hour, you pay about $8. Yep. If you want it in 2 hours, you get it for delivery for free.
Well, hold on a second. I'm in a city in Ohio.
Correct.
Yeah. I want my booze fast.
Yeah.
1 hour.
And I pay Amazon how much? $8?
About $7.99
to deliver my booze
in 1 hour.
In 1 hour.
Right.
Okay.
So the question is, will it do for the liquor store what it did for the bookstore if it starts getting into this area?
I can't believe it.
I know.
But who knows?
It's raining beer in Ohio.
Let's move. Yeah. Staying on tech. Apple, Alphabet, Facebook, update please. I believe we're still at or close to record highs for all of them. 140 on Apple, almost 140 on Facebook. John, do you like any of them, or are they now too expensive to jump in?
I own Apple. I've liked to own the stock since before it was $100. I've got a great profit in it right now. I'm holding on to it right now. Look, they have several $100 billion in cash. If they can repatriate a lot of that under this new tax policy of President Trump, that's going to significantly help the company as far as R&D. But the recurring revenue, I think, right now is why you'd own Apple.
Scott, do you own any of those three? And if not, would you buy any?
Yeah, all of them, Stuart, and like John, we've had these for quite some time. And here's the thing. If you're sitting at home and listening to us discuss the markets at these high levels and the worry about regulation reform and things like that, I'll tell you what, this is the time when you buy leaders. If you're to have some new cash that you want to put to work, there's no reason to be speculative. Buy the leaders, buy the cash flow heavy companies. Those are the ones we just mentioned.
Well, there's just no question that that is where the money has been flowing for a long, long time. Now, let me raise the issue of Canada Goose. They make those very expensive down jackets, the one with the red patch on, the little circle right there, okay? They're going public today. I don't believe they've had their first trade yet. Does anybody around this table like the idea of buying into Canada Goose stock? What do you say?
How is this not a fad? I don't like it. I just think this is one of these fashion trends, and it's going to tail off over time.
Okay, John, what do you say?
I think it's too much of a niche market, and if somebody steps into it.
Well,
That's right. I'm in Bermuda. I don't need a coat.
About Canada Goose.
Right. I don't own a coat.
No, I don't own a coat. All right, thanks very much. Last one, you, Scott, you're going to buy Canada Goose when it opens, or what?
No, I won't. I mean, I'd like to get Brenberg in one of those and take a picture of it. But I'll tell you what's interesting. Leifield's right.
Yeah,
I mean,
he's up for it.
the trouble is, though, is that these are a bit of a fad, and you don't get them everywhere. I mean, yes, the fact that it's 50 sometimes in June in Chicago plays well to the brand, but they need to expand worldwide, and there just frankly isn't the demand there via the climate situation.
Okay, so we didn't like Snap, we don't like Canada Goose, and we're a bunch of downers, aren't we? But we sure love Amazon. Thank you, Brian. Thank you, John. Thank you, Scott. All three of you. Thanks very much indeed, gentlemen. Good stuff. Check that big board.